Hey everybody, what's up? Today I'm looking at the SPY and I just want to go over my process a little bit of how I approach the market, how I do some technical analysis, and hopefully give you guys some trade ideas that you can use in your trading. So let's get started. So we all know the S&P has been downtrending. It's been an ugly market for the last year, but it's finally starting to reverse. And we can see that it actually broke out above of this trend line that's been in place for the last year. So that is awesome. I love the fact that we are finally holding above that 200-day moving average with some conviction. That is really important, guys, because before we would just get above, we would fail, we'd come up to it, fail, and here we got above it and we failed, but now we are above it and consolidating, and that is such a great sign. I also love that we have a golden cross right here, which is when the 50-day moving average crosses above the 200-day moving average. This is a great sign that the trend is reversing and we are finally getting some bullish momentum as compared to what we got here in the beginning of last year, where the 50 crossed under the 200-day moving average, and that is called a death cross, and that shows that the bears are in control and we have some pain ahead of us. So two important things to look out for. I also really like that we have an inverse head and shoulders right here. Market pullback here, made a new low, but then it made a more shallow pullback, which is showing that the buyers are in control and there is some bullish momentum. So all this is really great stuff. I also like that we are forming a bullish channel right here since the CPI low in October. So we got a series of higher lows, higher highs, and the market is looking really good here. But one way to look at this chart is you can just say, okay, I'm going to get long here, everything's going to be okay. Well, I mean, you could do that, but remember, price matters when you're investing in trading. A lot of times, if you can get the direction right, but if you get the entry wrong, you are not going to make any money. So we are dead smack in the middle of this range right here. So rather than being proactive, let's be reactive. Let's see what the market gives us, and then let's trade off of some pivot points in the market. Pivot points are super important, you guys. It's where the market is likely to be attracted to and then make some type of change, usually a reversal. So a great pivot point is just the moving averages right here. The 200-day moving average just got right up here, boom, went down. And the same thing can be said for these trend lines right here. As soon as we got down to this trend line right here and started showing some support, we moved up. Same as here, when we got to this trend line right here, we went back down. So let's really try to identify those pivot points. So with that being said, right here at this point, which is around 394, 393, right at that 200-day moving average, if we can get the market to come down here, not only are we going to have support of the 200-day moving average, but we are going to have trend line support. So that is two indicators that are working in our favor. And that's exactly what happened last summer when the market was pulling back right here. It shot up to the 200-day moving average right at that trend line. That was a great short. It was almost too easy to predict right here. So I think something else can happen here. And now look at this. If you extend the trend line even further, okay, you can see that we got that trend line break and we're going to come back and retest it. And look at everything that is lining up here. This is amazing. Not only do you have that downtrend line as support, you have this lower trend line here as support, and you have the 200-day and you have the 50-day, and there's the 100 not too far behind. Guys, this is where you want to get long. You'll have everything working in your favor, good risk reward, and that's what trading is all about, risk reward. You have to have good risk reward to be successful in trading. A lot of times you just have to wait for that setup. Now, the type of trading that I do is swing trading. I don't day trade that much. The same principles more or less apply, but on day trading it's a much faster time frame. So conversely, we want to wait till the market gets up to around this 430 level to get short, because look at how many indicators we're going to have going for us. We're going to have resistance here from this previous swing high in August around 430, plus we're going to have trend line resistance. So this is going to be a great place to get short the market. So that wraps up my analysis on the SPY. Hopefully you guys learned something. If you found value in this video, give it a thumbs up and consider subscribing. I'm going to be posting a lot more content about different trades I'm taking and just showing you guys how you can become a profitable swing trader. All right, thanks for watching. See you on the next one.